So today I want to share with you the 5 billionaire trading lessons from George Soros. We're going to talk about that today, coming up next. So if you don't know who George Soros is, he's the chairman of Soros Fund Management. As of last year, his net worth is more than $8 billion. Not millions, but billion. And if you've been in the forex industry for a long time, you know that he is known as so-called the man who broke the Bank of England, because there was one time he sold the pound, about $10 billion worth of pound. And during 1992, there was this Black Wednesday where he made a profit of over $1 billion. Meaning that while other people are dying, he is making billions. So whether you like him or not, you've got to admit it, he is one of the biggest donors to charity in the whole entire world, aside from Warren Buffett and Bill Gates, and he's ranked the Forbes list, one of the richest people in the world. So that's definitely something that we can learn from him. So my first favorite quote from George Soros is, "If investing is entertaining, you're probably not making any money, and also probably you're doing it wrong, because good investing is boring. Good trading is supposed to be boring." Now here's the thing, over the years I've seen a lot of people, they go into the stock market, they go into the forex market, they go into financial markets because their life is too boring. They want to go find some excitement. I've already said that if you want to find excitement, just go to the theme park, just go to the casino. If your country doesn't have casino, doesn't have theme park, just go download Candy Crush. So if you're complaining how dry, how mundane, how boring your daily investing and trading routine is, let me tell you something. It is supposed to be that way. It means that you're doing it right. Now my second favorite quote from George Soros is, he says that I'm only rich because I know when I'm wrong. Now he didn't say that I'm in the Forbes list, I'm the richest person in the world because I have the best trading system in the world, I have the best investing system in the world, because I'm talented, I'm born that way. He says that I basically have survived through recognizing my mistakes. I am no better than the other trader, than the next trader. I'm just quicker to realize my losses and move on to my next trade. That's his secret. If you ask any hedge fund manager, top hedge fund manager on Wall Street, in Singapore or around Asia, you ask them what is your secret to becoming a top 10%, top 1%. So far, none of them told me it's because I have the best moving average in the world. Most of them would either answer you something related to risk management or trading psychology. Never ever technicals. So going back to this quote, it means that George Soros, whenever he realized that he is losing money, he would cut losses early. Whereas for most people, especially beginners, they would let their losses run, take their profits early. When you cut your loss, it means that you are wrong about that investment. When rational thinking tells you that you should let your profits run and cut your losses early, but when your hard-earned money is on the line, a lot of people do the opposite. Then once they close the trade, they'll be like, what just happened? My third favorite quote from George Soros is, it's not whether you're right or wrong that's important, but how much money you make when you're right and how much money you lose when you're wrong. If I tell you System A has a 80% win rate, System B has a 40% win rate, which one would you pick? Most people would straight away pick the 80% win rate system, without even taking into account risk to reward ratio. Now the difference between retail traders and a lot of professional traders is that their focus is different. Retail traders, when they come in, all they focus on is win rate. Out of 10 trades, how many winning trades can I make? And on the other hand, professional traders and investors, they focus more on risk to reward ratio. Yes, of course, they still take care of their win rate, but professional traders know that as long as I have a good risk to reward ratio, it's okay for me to have a 45 or 50% win rate. I can still win in the long run. If you have watched my risk training video, how can you achieve a balance between win rate and also risk to reward ratio? Now the fourth quote? I'm sorry, I didn't sleep yesterday night. He says that the financial markets are unpredictable. The idea that you can actually predict what's going to happen contradicts my way of looking at the market. Now here's the thing, a lot of people think that you can predict where the market is going, especially in this industry where a lot of jokers, a lot of clowns, even in Singapore, there are people who will be like blindfold themselves, then they'll be like, the price is going to go to, then eventually the price hits the TP target because you don't use a stop loss. Like, anybody can do that. Now here's the thing, predicting It's only reserved for the weatherman. Tomorrow in California is gonna rain at the south side area. As you can see right here in this map, even the weatherman cannot give a 100% accurate prediction. Right? If you trade and invest with the mindset that you should be able to predict what's going to happen, you are telling the markets that I think I'm better than you, so move one side. Meaning that you don't respect the markets at all. And when you don't respect markets, a lot of bad things is going to happen. You don't predict the market, okay? Because nobody can, including me. A lot of people email me and then be like, Karen, can you predict where euro dollar is going to go tomorrow, next week, next month? I would answer them, do you think I'm a fortune teller? Now here's the thing, we don't trade in terms of prediction, we make an investment based on probability. Let's say you have 10 criteria for your evaluation. If 8 out of 10 of your criteria says yes, says buy, and 2 says no, then it is a good buy. Even if 10 out of 10 of your criteria is fulfilled, that investment or trade will still go the other way around because there's no perfect system in this world. So the final quote that I've learned from George Soros is, if I had to sum up my practical skills, I would use one word, which is survival. Now, if you run a hedge fund or if you know hedge fund managers, you know that blowing your client's account isn't a really good thing. So to make sure that all your clients are taken care of, you've got to make sure that all your trading accounts and investing accounts survives for many years. Because clients normally invest with you for years, they don't just come to you and be like, here, I take my money for 1 month, after that I'm gonna take it back. How do you make sure that your trading accounts survive in the long run? Again, it comes down to managing your risk, maximum drawdown, managing your percentage risk per trade, the amount of leverage you use, managing counterparty risk, managing liquidity risk, economic risk, political risk, all the other risks you need to take into account. And one of the ways that you can manage your risk is be willing to admit that you're wrong. You don't need to be ashamed that you're wrong, because the only time that you should be ashamed for being wrong is when you make a losing trade and then you fail to learn from it. You just ignore it. You'll be like, this is stupid. Before you go to the trading desk, take your ego, go to the toilet, throw it in the toilet bowl. Ego is gonna kill you. It's gonna kill your trading account. Okay, with that, let me know down in the comment section below which one's your favorite quote from George Soros. Or you have any other quotes that I did not mention, let me know too. Okay, so with that, I'll talk to you in the next episode. Bye.